Feeling left out because everyone is talking about investing, but you think you don't have enough money to even start? Well, hold on to your hats because today we're cracking the code on building a powerful portfolio, even if you're starting with just $1,000. We'll be unlocking the secrets of a legendary investor named Benjamin Graham and his time-tested strategies that can help you turn that $1,000 into a $10,000 treasure chest. So, buckle up and get ready to discover how to find hidden gems in the stock market, build a balanced portfolio, and become a value investing pro. Let's start with Benjamin Graham. Who is Benjamin Graham? Imagine your grandpa, the one who always gives wise advice and seems to know a thing or two about everything. Well, Benjamin Graham is kind of like the wise grandpa of investing. He's famous for his book, The Intelligent Investor, which has become a cornerstone for value investors around the world. The book teaches people how to find good deals in the stock market, not just chase the hottest trends. Now, let's understand the secret behind value investing. Value investing explained. So, what's the big secret behind value investing? Graham believed that the stock market can sometimes behave like a giant garage sale. Think about it. You might stumble upon a fancy watch for just a few bucks because the seller has no idea what it's actually worth. That's kind of the essence of value investing. The value investing is finding stocks that are priced way lower than their actual worth and buy these undervalued stocks. As the market recognizes their true value, the stock price increases and you potentially make a profit. Now we know the secret behind value investing. Let's roll up our sleeves and learn the steps of how you can become the treasure hunter of value investing. How can you be a value investor? To become a value investing treasure hunter, Graham suggests keeping these 3 things in mind. First, be patient. Don't expect to get rich overnight. Finding valuable stocks and building wealth takes time and effort, just like searching for hidden gems at a treasure hunt. Second, focus on value, not popularity. Don't get caught up in the hype surrounding the latest hot stocks everyone's talking about. Instead, look for companies that are like that fancy watch at the garage sale. That fancy watch is undervalued but with great potential for future growth. Third, do your research. Just like you wouldn't buy a watch without checking its brand and quality, you shouldn't invest in a company without understanding its financial health and future prospects. Research the company's financial reports, its products or services, and its position in the market. Now, let's start to explore how you can convert your $1,000 into $10,000 through value investing. Getting started with $1,000. Maybe you're thinking, $1,000 won't get me anywhere in the stock market, but that's not true at all. Here's how you can kickstart your investment journey, even with a limited budget, in just 3 simple steps. First, open an investment account. This is like your own little treasure chest at a bank, where you'll store the stocks you buy. There are many online brokers offering investment accounts. Do your research and choose a reputable one with low fees. Second, fractional shares. Some companies' stocks can be very expensive, costing hundreds or even thousands of dollars per share. But with fractional shares, you can buy a tiny slice of that expensive stock, even with limited funds. Think of it like buying a small piece of a delicious cake instead of the whole cake. Third, focus on a few gems, not a dozen. Don't spread yourself too thin by investing in too many companies right away. Research a few companies that seem undervalued based on your research, and invest your $1,000 strategically in those. Now you're equipped with the basics of opening an investment account and finding potential value stocks. But how do you identify these hidden gems? Buckle up, because we're about to embark on the exciting quest of finding the undervalued. This approach will be our treasure map to transforming your $1,000 into something much bigger. Finding the undervalued. Your treasure map to value stocks. Finding these hidden gem stocks requires some detective work, but it can be exciting. Here are 2 clues to help you unearth these potential treasures. First, stock screeners. Your online treasure maps. Websites like FinViz or Yahoo Finance offer stock screeners. These are like online treasure maps that help you find companies with low prices compared to their earnings or assets. Earnings are a company's profit, and assets are everything a company owns, like buildings or equipment. Here's a breakdown of what price-to-earnings ratio and price-to-book ratio can tell us. Price-to-earnings ratio. This compares a company's stock price to its earnings per share. A low price-to-earning ratio suggests the stock price might be low relative to the company's profit, potentially indicating an undervalued stock. Price-to-book ratio. This compares a company's stock price to its book value per share. The book value represents the net worth of the company on its books. A low price-to-book ratio suggests the stock price might be low compared to the company's net assets, again hinting at a potential undervalue. Second, company reports. Dive deep like a treasure hunter. Every publicly traded company is required to file reports that detail their financial health and future plans. These reports are like treasure chests, filled with information about the company's performance, debt levels, and future goals. Reading these reports can help you understand if a company is truly undervalued or if there might be hidden issues that could explain the low stock price. Don't worry, you don't need to be an accounting whiz to understand these reports. Many online resources and educational videos can help you decode the key financial information. Now, with your treasure hunting skills sharpened, let's build your very own portfolio. Building your treasure chest. A sample portfolio for $1,000. Remember, just like a real treasure chest wouldn't be filled with just gold coins, a strong investment portfolio shouldn't be all about a single company or stock type. This is called diversification, and it's crucial for managing risk. Here's a sample plan for how to allocate your $1,000 to build a balanced portfolio. First, 3 value stocks. Invest $300 to $400 each in 3 different companies you've thoroughly researched and believe they are undervalued. Remember, focus on companies with solid financial health, a track record of success, and the potential for future growth. Second, low-cost index fund. Put the remaining amount of your $1,000 in a low-cost index fund. An index fund is a group of stocks that mirrors a market index, and an example of a market is the S&P 500. Index funds provides diversification and exposure to the overall market's growth, even if you don't pick every winning stock yourself. Now that you've assembled your treasure chest, here are some key reminders to keep in mind for long-term success. Important reminders for value investors. Patience is key. Value investing is a long-term strategy, so buckle up for the ride. The stock market can be like a bumpy roller coaster at times. Don't get discouraged if your hidden gems don't shine immediately. Here are 3 things to keep in mind for long-term success. First, be patient. Trust the process. Just like a real treasure hunt, there might be some dead ends or unexpected twists along the way. The key is to stay patient and trust your research. The market might take time to recognize the true value of your chosen stocks. Second, rebalance regularly. Maintain your treasure chest's balance. As your stocks go up and down in price over time, your initial asset allocation, which sets up the percentage in each investment category, will get thrown off balance. Rebalancing involves strategically buying or selling shares to bring your portfolio back to your target allocation. This helps manage risk and ensures your portfolio stays aligned with your overall investment goals. Third, keep learning. The treasure hunt never ends. The financial world is constantly evolving. Value investing is not a get-rich-quick scheme. It requires ongoing education and research. Stay up to date on market trends, company news, and new value investing strategies. There are countless resources available online and in libraries, from books and articles to investment podcasts and webinars. The better equipped you'll be to make informed investment decisions and navigate the ever-changing market landscape. Conclusion. Building a strong portfolio with Benjamin Graham's value investing principles is like building a treasure chest full of valuable stocks. It takes time, research, and a good eye for a bargain. But by focusing on the long term, prioritizing quality over quick gains, and staying patient, you can grow your $1,000 into a well-diversified portfolio with the potential to grow steadily over time. This approach won't make you a millionaire overnight, but it can lay the foundation for a secure financial future. So, are you ready to become a value investing treasure hunter? If you're interested in learning more about value investing or getting started with your own portfolio, leave a comment below and let us know. Don't forget to like this video and subscribe to the channel for more investment tips and strategies. Thanks for watching.